All right, so get this. We're diving into SEBI's big catch, Ketan Parekh and the 65 crore heist today.
Oh, yeah, I've heard of this guy.
And the crazy thing is, this isn't even his first stock market rodeo.
No.
Nope. Back in 2001, Ketan Parekh was linked to a scam worth like 40,000 crores. It's unbelievable.
Oh, yeah, that's a lot of zeros. So what's he been up to this time?
Well, this time it all comes down to something called front running.
Okay, I've heard that term thrown around. What exactly does that mean?
Basically, someone gets their hands on some top secret trading info.
Like insider trading?
Similar, but with front running, they use that info to buy stocks right before a big investor jumps in knowing the price is about to skyrocket.
So they're basically getting a free ride on someone else's market-moving purchase.
Exactly. And that's where this guy, Rohit Salgaocar, comes in.
Okay, what's his role in all this?
Well, he was based in Singapore, working as a middleman for foreign investors in India.
Okay, so he had access to all sorts of confidential data.
Oh, yeah. He had the inside scoop on a major U.S.-based investors' moves, which stocks they were buying, how much, their target price, even the exact timing of their trades.
So basically, he had the keys to the kingdom.
Pretty much. And what does he do with this valuable info? He passes it along to Ketan Parekh.
Oh, no. I see where this is going.
Yep. Parekh, along with his buddies, brokers, corporate accounts, they all use this leaked info to get ahead of the game.
So they were buying up those same stocks just before the big investors' orders went through.
You got it. They were like cutting in line knowing the price was about to shoot up.
And then they just sell at the higher price, easy money.
Exactly. The source even gives this example. Imagine the big investors about to buy a ton of shares at 100 new. Each Parekh's crew buys first at that same price, then boom, the big investor's purchase pushes the price up to, let's say, 105.
And Parekh and his friends cash out laughing all the way to the bank.
And we're not talking about a few shares here. When you're dealing with thousands or even lakhs of shares, those He5 profits per share add up really fast.
It's crazy how much money they must have made.
Oh, it's a lot. But here's where it gets even wilder. Parekh's network didn't just buy ahead of the big investor. They often acted as the counterparty to those trades, too.
Wait, hold on. What does that mean? Counterparty?
Oh, right. Sorry. In any trade, you need a buyer and a seller, right?
Yeah.
The counterparty is basically the person on the other side of your transaction.
So if I'm buying a stock, my counterparty is the one selling it to me.
Exactly. And in this case, Parekh's group was often both buying from and selling to the big investor.
Whoa. So they were playing both sides.
Yep. Talk about a rigged game. They were practically guaranteed a profit no matter which way the market moved.
So they had it all figured out.
And get this, Salgaocar, the guy who leaked the info, admitted that something like 90% of the counterparties he set up were from Parekh's network.
90%. Wow, they had serious control over the whole operation.
But now the big question is, how did they move all that money around without anyone noticing? Those profits had to be massive.
Right under everyone's noses.
Yeah.
Well, that's where things take a kind of old school turn. They use the Angadiya system. The Angadiya system, it's this ancient Indian network for transferring funds or valuables based on trust and informal agreements.
Like a secret society of money movers?
Kind of. It's fascinating how they integrated this age-old method into their modern stock market scheme.
Hold on, the Angadiya system, isn't that something from like history books?
It is, but it still exists. It's a testament to its resilience and the power of established relationships. Imagine this intricate network quietly moving huge sums of money while all these high-tech trades are happening on the stock exchange.
So it's like ancient methods colliding with modern finance.
Exactly.
Huh?
A fascinating contrast. But as you might guess, even with this clever system, SEBI eventually caught on.
They did. How?
SEBI noticed these weird trading patterns happening. They saw that similar trades kept popping up just minutes before the large investors' orders came in.
So they realized the same group was always buying stocks that were about to jump in price.
Exactly. That's a major red flag for front running.
But how did they actually prove it? What was their smoking gun?
Well, they launched a full-on investigation, conducting searches and seizing evidence from all over the place.
Okay, but everyone has phones and trading records.
Yeah.
What made them certain that this was more than just a coincidence?
Well, during those searches, they stumbled on something much more incriminating. Decoded WhatsApp messages.
WhatsApp, like the messaging app.
Yep. And in those messages, Parekh was using nicknames like Jack and Boss, giving instructions and coordinating the whole scheme.
So they caught him red-handed orchestrating everything through WhatsApp.
Exactly.
Yeah.
And when they followed the money trail, it led them straight to the Angadiya network, revealing how Parekh was spreading the profits around.
It's incredible. They used a system built on trust and personal connections to cover up this massive financial crime.
It just goes to show that even the most sophisticated schemes can leave a trail.
So what happened next? Did they just let this slide?
No way SEBI took immediate action. Parekh and everyone involved were banned from trading, and they were given just 3 months to close out all their existing derivative positions.
Okay, but what are derivative positions? And why was that part of the punishment?
Think of a derivative like a bet on the future price of a stock. It's a way to amplify your gains or losses, making them riskier. SEBI's order basically forced Parekh and his crew to unwind these bets, stopping them from making more money while the investigation was going on.
So they basically shut down their operation and put a stop to their games.
Exactly. But this is just the tip of the iceberg. This case opens up a whole can of worms when you think about it.
You're right. It goes way beyond just one guy and one scam. There are bigger questions at play here.
Absolutely. We need to understand the wider context, how this could impact investor confidence, and what steps can be taken to prevent this from happening again.
And that's exactly what we're going to dig into in part 2 of this deep dive. We'll be back after a short break. Stay tuned. So we've seen how this whole scheme went down, but man, this case really makes you think, doesn't it?
It does. The Ketan Parekh case isn't just about one guy. It shows us some weaknesses in the whole system.
Exactly. If a big investor from the U.S. can get tricked like this, what does that mean for regular investors?
That's a good question. But remember, knowing about these scams is the first step to protecting yourself.
So what can people do to stay safe and not fall for these tricks?
One thing to watch out for is random investment tips, or those too good to be true opportunities.
Oh, yeah, those get-rich-quick schemes.
Exactly. If it sounds too good to be true, it probably is.
That's good advice. It's easy to get caught up in the excitement, though.
It is. And that's why it's so important to do your homework. Don't just follow the crowd or trust someone's advice without checking it out.
So don't just read a few headlines or listen to some financial guru on TV.
Nope. Dig deeper.
Right.
Research the companies you're interested in, look at their finances, their business model, and think about their future.
So be more hands-on with your investments.
Right. Knowledge is power. Another important thing is to diversify your portfolio.
Don't put all your eggs in one basket.
Exactly.
So spread your investments across different types of assets and industries. That way, if one investment goes bad, it won't ruin everything.
So it's about having a balanced portfolio that fits your situation.
Exactly. And just as important as building a diverse portfolio is staying informed. Keep up with market news trends and new regulations. Read good financial publications, follow reliable analysts, and be aware of any warning signs.
Be an active participant in your financial journey.
Right. And remember, if something feels off, report it. Whether it's strange trading activity, misleading information, or potential fraud, telling the authorities can protect other people.
So who do we report these suspicions to? SEBI directly?
Yep. You can file a complaint on their website or contact them by phone or email. They're serious about this stuff.
That's reassuring to know.
Yeah.
It's good to have those options if we see something fishy.
Absolutely. Protecting your investments is an ongoing thing. It's not just a one-time task. You got to stay informed, be cautious, and trust your gut.
So always be on guard.
Pretty much. And be careful about who you tell your investment plans to. You mean even casual conversations about our investments could be risky.
It's always better to be safe than sorry. Be mindful of who you're talking to. You never know who's listening.
Good point. And that makes me think about choosing financial advisors carefully, too.
Oh, definitely. Do your researches, check their credentials, and make sure they're registered. Make sure you feel good about sharing your info with them.
It's like building a financial dream team.
That's a great way to put it.
Yeah.
Remember, this Ketan Parekh case was about front-running. But there are tons of other scams out there.
So even if we know about front-running, we're not completely safe.
Unfortunately not. Stay vigilant, learn about different types of fraud, and adjust your strategies. The financial world is always changing, and so are the scammers.
It's like a never-ending game of cat and mouse.
It can feel that way, but knowledge is our best weapon. The more we know about scams, the better we can protect ourselves.
It's empowering to know we can do something to protect ourselves.
Absolutely. Even if you've been a victim of fraud before, don't let it stop you. Learn from it and move forward.
Turn that negative into a positive.
Right? Remember, investing is a journey. There will be ups and downs, but by staying informed, managing risk, and making good decisions, we can reach our goals.
You've given us a lot to think about. It's interesting how this one case brought up so many important issues.
It is. We've gone from the details of front-running to a bigger discussion about market integrity, investor protection, and the role of technology in finance.
You're right. It's more than just one scam. It's about the future of our financial system.
Absolutely.
Yeah.
And that's what makes this deep dive so valuable. It's not just about one case. It's about sparking a conversation about these big challenges and opportunities.
So what's the main takeaway for our listeners today?
The most important thing is knowledge is power. The more you know about the markets, the risks, and the scams, the better you can protect yourself.
So do your research and don't be afraid to ask questions.
Exactly. And if something sounds too good to be true, it probably is.
Right. Don't fall for those promises of easy money. Investing takes patience, discipline, and continuous learning.
Well said. We've covered so much today, from the specifics of the Ketan Parekh case to bigger ideas about market integrity and protecting investors.
Hopefully this deep dive has given you some valuable knowledge and tools to feel confident in the financial world.
And if this got you interested, there's a ton of information out there. Keep learning. Your financial well-being is worth it.
I couldn't agree more.
Ah.
Until next time, stay informed and happy investing. All right, so we're back and ready to finish up our look at this Ketan Parekh case. We've seen how he pulled it off, talked about how investors can protect themselves. But what about the authorities? What's being done so this doesn't happen again?
Well, SEBI's been very clear. They're taking this seriously. As we said, Parekh and his buddies are banned from trading, and their derivative positions are frozen.
Sounds like they acted fast. But is that it? Is that enough to really stop this from happening again?
Well, it definitely sends a message that SEBI is serious about keeping the market fair. But the investigation's still going on.
So they're not just giving them a slap on the wrist?
Not at all. SEBI's digging deeper to see how big this thing really was. They're going through all the data, the trade, the WhatsApp messages to find everyone involved and all the money they made.
Wow, sounds thorough. But what about the bigger picture? What about the things that allowed this to happen in the first place?
That's where it gets interesting. This case showed us some weaknesses in how the market is watched. SEBI will probably look at their rules and enforcement to see what needs to be stronger.
So it's not just about punishing the bad guys. It's about learning from this and making the system better.
Exactly. SEBI might do things like improve their algorithms to spot suspicious trading faster, or make it easier for whistleblowers to come forward, and maybe increase the penalties for market manipulation.
Big changes. But what about technology? Parekh used WhatsApp to run his scheme. Could technology be part of the solution too?
Absolutely. Technology is a tool. It can be used for good or bad. SEBI is looking at ways to use tech to improve market surveillance. They're already using algorithms, but they always have to stay ahead of the game.
Like a race to keep up with the bad guys.
You could say that. It takes strong rules, good enforcement, new technology, and most importantly, investors who know what to watch out for.
It's amazing how much this one case has shown us. We went from front-running to talking about the whole market, how to protect investors, and the role of technology in finance.
And that's what's great about this deep dive. It's not just about one scam. It's about having a bigger conversation about the challenges and opportunities in our financial system.
So what's the most important thing for our listeners to remember?
Knowledge is power. The more you know about the markets, the risks, and the scams, the better you can protect yourself and make good decisions.
Do your research, don't be afraid to ask questions.
And if something sounds too good to be true, well, you know the rest.
Exactly. No easy money. Investing takes patience, discipline, and always learning new things.
That's a great point. We've learned a lot today about the Ketan Parekh scam, about how markets work, and how investors can be empowered.
Hopefully this deep dive has given you the knowledge and tools to navigate the financial world and make smart decisions.
And if you're curious, keep exploring and learning. It's worth it for your financial future.
Totally agree. Thanks for joining us for this deep dive. Until next time, stay informed and happy investing.